Welcome to my morning report analysis videos with me, Rich Pro-Market Analyst at Hantec Markets on Monday, the 18th of March. There's a fairly positive outlook to markets today. What we have seen is equity markets, certainly in the States, breaking higher, and that's sort of filtered through for Europe. Let me show you that S&P 400 closing at the highest level since October. And that was a key breakout on Friday. We've seen that the FTSE 100 has joined that in a breakout above 7,260. That's a breakout. DAX has a little bit less positive, but sort of testing also its breakout levels. And overhead supply, key overhead supply, 11,725 is the level to watch on the DAX. But there is certainly this more positive outlook. And it's interesting that this is coming as the dollar continues to sort of slip away, and that slip away has come with treasury yields falling to their lowest level pretty much since the start of the year. That's coming as the FOMC meeting approaches this week. Expectation that perhaps the FOMC is likely to cut back its expectations on its economic indicators. And that would be perceived to be a dovish tilt as well there, but perhaps the market's gone a little bit anti-dollar at the moment, anti-yield. But I think ultimately, dollar is still going to be playing out a fairly choppy move, but today certainly under pressure still, and that's reflective through the euro dollar staying firmly above $1.13, and also would be seeing gold back above $1,300 again. Again, 1310 is a key pivot on gold. So some interesting moves that we are seeing there. Now, in terms of data points today, we're not really a great deal. We've got the NAHB, the National Association of Home Builders, that got their housing market index at 2 o'clock, at 2 o'clock UK time. 63, so there's a slight improvement there, but that's pretty much it. Now, in terms of my chart of the day, I spoke just now about the FTSE 100. That is my chart of the day, and what we've seen is a move above the 7,261 level that we saw. That was the February high, so that's a decisive breakout move, continuing this run higher. Arguably, I suppose, within an uptrend channel, although it's not perfect, but still breaking through 7,261 is a breakout level. It's certainly if done on a closing basis. You've got the momentum, which is positive, the RSI in the mid 60s, stochastics rising into strong configuration, the MACD lines also now crossing higher above neutral. That tends to be a very positive signal. So if the market can get above 7,300, then I think certainly we're on the way for a recovery, because 7,300 is, broadly speaking, the top of the long-term pivot band. But a breakout through that, and you're up into realms of where September, October, these reaction, this mini trading band here around the 7,550 level, which was the key high back in late September, early October. So this recovery on FTSE is progressing well, and you're sort of looking to buy into weakness. You've got the hourly chart showing a nice little uptrend, breaking through 7,240 there or thereabouts is a nice line of support with that uptrend, but also these breakout highs as well. You've got strong configuration on the RSI. Anything that unwinds RSI back towards 50 is, broadly speaking, a nice sort of buying opportunity as well. You've got stochastics and MACD lines well set up. So the FTSE is actually performing pretty well. You've got Brexit, which is obviously a key factor for FTSE at the moment. And it seems as though that a move towards a softer Brexit, although you've got the negative correlation between FTSE and sterling, still a potential factor to play out in markets. I think anything that comes to the benefit of UK assets is, generally speaking, going to be fairly supportive and positive for FTSE 100. So pulling higher, and I think it looks well set up at the moment to buy into weakness. So with that in mind, I wish you good luck in your trading today, and I will speak to you again later.